Hi everyone, hope you're all doing well, and today I'm going to do a video talking about the 5 stocks that I'm up the most and 5 stocks that I'm down the most on. So today I was trying to think of an idea where I think like over the last few days I've been talking quite heavily about like one stock in particular and done like a bit of a deep dive into them stocks, and I know some of you guys on the channel like that content, but I know some of you guys on the channel as well like the content where I do like quick fire through a few stocks and like mention 10 stocks very quickly through a 10-15 minute video. So today I thought, you know what video could I do talking about a lot of stocks that I own very quickly, and I came about doing an idea of talking about the stocks I'm up the most and maybe some things that I learnt from them companies, as well as the 5 stocks that I'm currently down the most on, and once again talk about them companies and my thoughts on where I'm at with them and anything that I've in particular learnt about them companies after investing in them. And just going to mention as well, these companies that I'm invested in, that I'm up the most on, this isn't including companies that I've also sold. So there's a few companies that I've sold that if I was to do the 5 stocks I've ever made the most money on, obviously they would come into this list, but I wanted to do the ones that I'm currently open as well, rather than what's closed, and learn from what I'm currently opening, I guess, as well. So thought I'd just mention that point as well. But as well as that, as well as showing this, I also wanted to be transparent, because it could have been very easy for me to go, oh, let's just ignore that, let's talk about the 5 stocks that I'm up the most on. But you know, I want to try, as always, try and build this channel on transparency and try and make it a good place for learning try and teach you guys the mistakes or good things that I've learned in the stock market, and hopefully it maybe teaches you something that you might not have learned for another 4 years in investing, and you go, oh, that's actually a really good point. And at the same time, any like little mistakes I might have made in the stock market, you know, teach you guys them mistakes so you don't make that mistake and go, oh, I wish I knew that, I guess. So yeah, you know, obviously just trying to keep up with the channel and the transparency and the honesty and everything like that. So if you could hit the like button, and if you do want to join the Patreon, the link is in the description. For you guys on the Patreon, there will be an exclusive video coming up in the next few hours which will be talking about how to structure a portfolio and a bit more of a deep dive into that. And if you do want to start investing, there's some links to some brokers in the description, like Free Trade, like Stake. You join through there, you also get a free share as well. But we'll get stuck onto the 5 stocks I'm up the most on and the 5 stocks that I'm down the most on. And I think we'll start with the stocks that I'm up the most on and start in a positive way. So at the moment, my best holding that I currently have is InMode. Now this is a holding that I've actually not had too long. I think I've been in this company for around about a year and maybe 3 months. So this is actually quite a short-term investment really, but to see it already up to 165% is really good. I kind of capitalised on this one. Ben, shout out to Ben, because he was the one that pointed me in the direction of this company. And I had a look at it and I thought, wow, you know, profitable company, trading at a forward P, I think at the time like 16 or something. Affected by the CV situation, revenue growth was fantastic, really good balance sheet, very good expansion plans, and I just thought, you know what, this company is massively undervalued. And at this point, you know, I did think I would have some gains on it, but I didn't think I would ever be up this much. But the stock market has really taken to it. There's a lot of institutions buying into this company. And actually, realistically, when I do look at the portfolio, I think the average is like $30, and it is like $100 at the moment. I generally think like InMode in the next 5 years could be a $300 stock. So I'd be roughly up at nearly a 10 bagger up there. So realistically, my portfolio, I think, you know, with this sort of company, when it goes up that much, I'm actually thinking, oh, maybe I should take some profit from this. But generally, when I look at InMode like 5 years down the line, I still think it'd be very good with the profit growth and revenue growth it's putting in. And actually, in my portfolio, I think this could potentially be a 10 bagger. So at the moment, I've not really got any plans to sell InMode, because I think that in the next few years, if I carry on holding this, like I say, I think I could have a stock that's up over 1,000%, which would be really good. So yeah, I'm really happy with that one, and yeah, no plans to sell it all. Number 2 is a Chinese company, which is JD.com. So I bought this one back in 2018, I believe it was. So a few years ago now. I bought this company when I saw a lot of the scary news out there, very much what's going on right now with a lot of Chinese stocks. There was a lot of fear about delisting, China trade war, and yeah, JD.com, I think it got to the point where I remember it was in my stock. I use an app called Stockmaster, and that's where I track all my stocks. And I just kept looking at it every couple of weeks, and I kept looking at JD.com and I'm going, it just keeps dropping that. And the company itself, like, it got to $33, I believe, in 2017. That's when I started tracking the company, and I went, that's a really interesting company. The valuation's a bit too much. I'll just watch it and put it on a watch list and see if it ever comes a good value. And pretty much a year later, I was looking at the company, and it went from like I think it was $33, and it went down to like 25, and I was like, oh, this is getting really tempting. And then it was like 22, and I was like, right, I'm going to start buying a bit. And then eventually it even dropped all the way down, I believe, to like $18. And there's a common thing you'll see with actually a lot of these stocks that I'm up on, is that it's just one of those things, like a lot of these companies, in the first few months of investing on them, I go down on the short term, but you look at where where they mature to, and that's the thing, is investing for the long term. And JD was a prime example. I mean, when I started buying this company, I think I went down like maybe 10-20% on that one. Same with InMode, I was down 10-20%, and you look where you are a bit further down the line, and it's really good. But going back to the point about JD.com, I bought that when there was a lot of fear about Chinese stocks out there, and I just thought, it's a really good company. I think like the difference between like Alibaba and JD.com is they held a lot of their stocks and the products they sold, and the warehouses were amazing. The warehouses were like, I don't know if you've ever seen them, but basically they were all like, there was only like 3 people that like worked at the actual warehouse, and pretty much all the kind of storage, getting the products off the shelves, were done by robots, putting it to the right parcel station, delivery station, and even like the logistics side of it, like JD.com were trying to like deliver parcels like in 24 hours, and was really ahead of the game. So yeah, I was really interested in JD.com, and like I said, I just saw it on a massive dip back in 2018, and pulled the trigger eventually, and up 247% now. I actually was up nearly at one point until this whole kind of Chinese hatred of stocks came back around recently, and this JD.com was actually nearly 400% up, so it's actually pulled back quite a fair bit than what I wore up. Since I bought that in 2018, a little bit difference here to InMode is that I have sold half of my position. I locked that in. I've took little trimmings quite often. I think the first time I kind of trimmed JD.com was like up 100%. I think I did some at like 200, some at 300% up. I think I even trimmed some when it was getting to nearly 400% up. So difference is there, I have took a bit of profit on it. The reason why I took a profit on that one compared to an InMode is just that I just knew about the risks of Chinese stocks, and it would only take a bit of negative press for them to go down again. And I just thought, just take a little bit of profit off the table on that one. But yeah, it's done very well for us. Number 3 on this list is a UK stock. So I have done my UK portfolio and my US portfolio on this one. But yeah, is a UK holding, which is 888 Casinos, or 888 Holdings. And I bought this one in the CV dip. I bought this one because I thought, it's got good growth, good profit growth, good revenue growth. And I'll be honest, I actually kind of picked this up for a bit of a dividend play. I saw what the company potentially pays out a dividend every year. I thought it's a bit of a solid dividend. I think I'll get some share price appreciation as well. But I think the whole kind of like US boom as well has kind of got a lot of interest in it. I think a few people have gone, oh, maybe they could be bought out as well. So yeah, I only ever attended that one to actually bring in like a kind of like a 50% return, and then maybe a bit more after it recovers from the CV dip, but it's even performed better than what I could ever expect. Not bad for a dividend stock at all. So yeah, once again, not got any plans to sell it, because I think with the growth in the US, and also with it being an online based kind of casino, I guess, I like it, and I've got no plans at all to kind of sell that one at the moment. Number 4 is my longest ever holding in my portfolio. I've owned this one for, I believe, 5 or 6 years now. So it's my longest holding. I held this one for a long time. I'm up 157%. But for Microsoft, what I historically did is I averaged up on this one. I don't normally average up on positions. I only ever really average up if I go, there's a lot of upside here. And for Microsoft, I still thought there was like loads of upside. So that was one that I did average up a huge amount on it. I started buying Microsoft a long time ago. I think the first time I started buying Microsoft was something like $70, which is crazy to say right now. And now my average is about 100, 110. So I have averaged up a fair bit. I've also taken a little bit of profit off it recently, just because it's a lot higher than what I ever expected to do. I basically bought Microsoft a few years ago because I looked at the company and thought, good profit growth, good revenue growth, loads of good income streams coming into this company. It's trading at at the time, it was trading like a P ratio of I believe it was like 18 or 20. And I thought, well, if the market's a P ratio of 18 and 20, these guys are going to grow very quickly as well. That valuation is just so cheap compared to the market and the growth they're putting in. And obviously the growth's then even put in periods of even growing faster than 10%. There's been some times where they've grown like 12, 13, even 20%. And that's also helped the valuation. And also nowadays, from where I kind of started buying Microsoft, where it traded at a 20p ratio, I think it trades at like a 40p ratio right now, which is crazy. So I can't buy any Microsoft at these sort of prices, and I've even considered maybe selling it. But I do really like the company. I like how much. It's one of those companies that even if it trades at a premium, it just has a little bit dip and buyers come in and buy it again. And also it's a little bit of a good dividend payer as well. So yeah, I'm just kind of happy to hold it in the portfolio. But yeah, up 157% on that one. And number 5 is Pinterest. So I still hold a position in Pinterest. Bought this one, I believe, in 2019. Started buying this one after its IPO, and the IPO, it flopped and the share price got absolutely crushed. And once again, this was a company that I bought and then I went down on after buying it. But I just kept averaging in because I thought I really like the platform. I like how they're going to advertise a lot more in Europe, and how much the Europe side of the platform is growing, and the monetization they'll make from Pinterest, from the Europe side of it. And yeah, I just bought the stock thinking it'll be a very good platform when the profit creeps in, revenue keeps on growing. Obviously the CV situation especially helped it last year. And yeah, it's been a very good stock for me. I mean, at one point as well, this company as well was up, and it's dropped a lot after its recent earnings, but I think it was up 200% as well at one point. And I actually held some shares in another account which was up 300%, and I've sold all them off, but I still hold this position here. And yeah, I'm quite happy. I've trimmed a little bit of the position just because I thought it boomed a bit too high because of the CV situation, and the numbers will be quite hard to keep doing them sort of growth. And it's turned out that's happened. But at the same time, I was like, I'll just take a little bit of profit off the table. But at the same time, I still think Pinterest is a great platform for the next kind of few years. And yeah, I'm very happy with the move that I made there. So that's all the positive ones. We'll go on to some of the negative ones now. So the stock that I'm currently down on the most on is a UK stock, and it is best of the best. So I'm down 64% on this company. Now what you'll see actually with a lot of these companies is these companies actually make a very small amount. If you ever watch my portfolio reviews, you'll see they'll make quite a small amount of my portfolio up, because I knew they were quite risky stocks. Where you compare it's like a Microsoft and InMode, they were actually like both of them at a time were my biggest holdings in my portfolio, because I was very confident on them. These sort of companies I looked at and thought they're actually quite risky companies, so I've never made them a big position, which has worked out quite well. So I've always kept them quite small because I always knew there was a risk with them, and there is a lot of them you'll see there's a lot of high risk, high reward, and at the moment a few of them, the high risk part is looking at them. But actually when I go through a few of these companies, I'm actually still quite bullish on them. It's just that I knew there was quite a lot of high risk with them, and a few of these you'll see that the high risk part has kind of played out with a lot of these companies. But number 5 is best of the best, or worst of the worst. Yeah, I kind of bought this one and thought, you know what, I like how they've gone to online platform. I think they've got a strong balance sheet, good profit margins, bit of a value play and a dividend. And what will maybe happen is there's a slowdown here, share price drops, I'll kind of buy in and make some good money over the next kind of 5 years. Now, in hindsight, my mistake is that I didn't actually realize how fast it was going to slow down, and then that would burn into the profit as much as it did, and then they would trading update, and then the stock goes down. Now, like I said, for me, I'm not actually too bothered, because normally when a stock goes lower, I'm like, oh, that's actually quite good, because then I can average down and then make more money. And I'm still thinking like best of the best. Like, I'm not kind of panic selling out of this, even though I'm down 64% and it's the worst stock in my portfolio. I've only actually owned this company for 3 months, and you'll see that quite often with a lot of these stocks. I've only held a lot of these companies for like a couple of months, and like I say, I'm more bothered about where they're going to go in like 2 to 5 years. So yeah, for this one, like, it's definitely dropped a lot more than what I thought it would, and in hindsight, I could have potentially realised that. But at the same time, I'm still giving myself a lot of room to average into it. And yeah, best of best is down 64%, and I probably made a mistake buying a little bit too early rather than waiting 6 months after the opening up and then buying. But overall, I'm still quite confident in the company, so I will average down on this one. I probably won't be down 64% as much in the future, because I'll probably start averaging down again sometime soon. But I'm just kind of waiting for the stock charts not nosedive as much and kind of flatline a little bit, and then also a little bit of a trading update where there's a little bit more confidence from management going, yeah, we're not seeing much of a slowdown now. And when that probably happens, there'll actually probably be a bit of a jump in the share price, and I won't get the exact lows, but I'm not too bothered, because it's better than just kind of averaging down, and then I have a risky play come a big position, which I want to avoid. So yeah, that's number 5. So number 4 is Ehang. So it's a Chinese stock that I bought, I think about 4 or 5 months ago, I believe it was. So same again, not been in this one too long. This is the highest risk stock that I own in my portfolio, without a doubt. This is basically a spec play, and it is on the lines of kind of gambling, I would say, but I am kind of investing for what the potential is in the next kind of 5 years. But with this one, it's generally a 50-50 shot if it's successful or not successful. But I kind of went into Ehang and thought, I think that in the next few years, drones are going to be massive through transport, through firefighting, as you know, we'll get higher skyscrapers, medical care as well, getting medical care are there a lot quicker. But in transport in general, you know, there's so much congestion at the moment, you know, even going underground or actually on the streets, that, okay, what's the next thing you can do to kind of speed this up? Go over the top. And I think that will be a thing at some point. When that will happen, we'll see. As well as like tourist attractions as well. So, you know, to be able to go on a drone and fly around and then it comes back again, I think that could be quite popular as well. So there's a few things in here, and I think the more that gets allowed will be the bigger opportunity that this has, and I think that will be something that does develop in the next 5 years. My thinking is okay, who's the number 1 player in here? Ehang, because they've got a product that's proven with a lot of test flights. They've even got a mass production facility now. And I thought, okay, if it is going to kick off, who's going to be the number 1 player? It's Ehang. And I think the drone industry will be massive. I think we're already starting to see it as well in China with quite a few of the parcel delivery service as well. I think the drones will be huge in the next few years. So for me, I kind of thought, you know what, if it is a massive growth area in the next few years, who's the number 1 player? Buy this one here and just kind of hold. And I'm not too bothered where this one goes in like the next kind of 1 year, 2 year. Like I said, for me, this is definitely the long end of the spectrum of investing, and see how it plays out. So yeah, that's definitely a high risk stock, but I still kind of believe that they have a lot of potential in the next few years. And number 3 is Hyre. I've got a full video on these guys actually. I think I did a full video on them earlier this week, talking about Hyre, another Chinese stock. Obviously, it's not a coincidence that Chinese stocks are out of favour at the moment, so the potential of them being on this list was very high. A lot of them have sunk down a huge amount, and Hyre is down 33%. Same again, I've been in this one for actually a year, which I believe is probably the longest one on this list. But yeah, they've kind of got, first of all, they got hit by the merger and the uncertainty were there, and then the Chinese stock pressure came in. It's just been bad timing in this one. Something that you can't predict as an investor. So I'd try and kind of say something that would try and help, like, avoid that situation. But sometimes it's just one of those that you can't predict, and you just got to go, as long as it's a good company, which is growing profit and revenue, they'll kind of work it out in the next few years. And same with Hyre, I believe that if I was to do this again in a year's time, I don't believe it would have come on this list. I think it would start turning around by then. But yeah, I still believe in this one a huge amount. This is probably the one on this list that's actually quite a decent position. And yeah, I still believe in it. And sometimes it's just part of the game. This is why, you know, don't invest for a 12-month period. Invest for the long term. And any little slumps in share prices that you don't kind of predict, time will be on your side. So yeah, I think time will sort that one out. Obviously, it's been a bit of a stinker, but yeah, we'll see what happens in a bit with that one. Number 2 is Skillz. So this is actually still a pretty decent position size in this one. It's not as big as my Hyre position, but it does have that little bit more risk with it because it is an unprofitable company, and it also does trade at a little bit of a higher valuation. But at the same time, you can argue, well, it grows at 100% revenue rate, so it does deserve to trade a little bit higher. Still very confident on this one. It's been a rough couple of months for this one. Just kind of gone out of favour. A lot of small market caps have gone out of favour, but this one in particular. And yeah, since it had a short report came out, it's just been ugly on the share price. There's been little pops now and then when some good news has come out, but it does seem a bit more of a day traded stock. I have actually made some really good money off this one. I've actually twice, I believe, or maybe 3 times, took a bit of profit on this one. So even though it's on this list as like a stock that's down quite a bit right now, I've actually made money on it, which is good. But I do invest this in the long term because I believe like esports and mobile gaming will be huge. And even if these guys aren't huge as the company develops in the next few years, I think these guys could be actually a prime buyout for someone that wants to kind of get in this sort of industry. So yeah, I'm still massively confident on that one. And I think I've been in Skillz for coming up to probably about 10 months now, maybe 9 months. So yeah, a bit of a longer term investment, but it's not been so bad with Skillz. It's one of those where it just kind of got caught up in hype back in February and went up to crazy valuations, and maybe then I could have actually sold for a bit more of a profit, to be fair, but I still believe in this in the long term, so that's why I'm still kind of holding it. So yeah, I'm still holding Skillz, but that's been a bit of a rough one since the short report did come out about that company. And the last one, down 24%, is actually a company that I've actually got no video on the channel with. I've never made a video on it. It's once again a very risky play. It's currently at a SPAC stage, but it's going to be eToro. So eventually it will change to eToro. That's going to happen very soon. And I bought eToro just because it's like the third of the valuation of Robinhood, but yet it's only like slightly behind on like revenue growth and revenue and customers. So yeah, I think eToro is kind of dominating like Europe, but Robinhood's dominating US. And I just thought the difference in valuations between eToro and Robinhood, either they're both crazy overvalued or either this one's undervalued. So I bought eToro as a SPAC because I thought it's a bit of a high risk play. I kind of bought it and thought eventually it might have that little bump up to Robinhood's valuation, or people see how well they've recently done with acquiring users and the stock market doing well and people being at home and stuff like that. So yeah, this is just a bit of once again a bit of a spec play, a little bit of a risky play where I'm not kind of in this for long term, but I'm just kind of looking at that one for a bit more of a short term gains, which I don't normally do. Obviously, I normally invest for 2 to 5 years, but for that one, I'm kind of a bit more short term. So yeah, I do own a little bit of eToro. It's not a huge position once again. I think it's either between eToro and Ehang. They are, I believe, my two smallest positions in the portfolio. I don't know which one is actually smaller off the top of my head, but they are quite small. But yeah, I do own a few shares in that one. What has kind of made me realise over the last kind of few months is that if I do talk about some of the high risk plays, no matter how much I say this is high risk and it will move a lot and you could go down very quickly, at the same time you could go up very quickly, but you've got to be careful you do go down, and that there is that high risk with it. And also they should also never make a big amount in your stock market portfolio, only a small amount. Is that I always have someone in the comment section that say a Skillz kind of drops down, a little bit on the last few months, like, what's going on with Skillz? What's happening here? And it's like, come on, if you're coming to me and you don't know what you're invested in, you've got to learn what you're invested in. And I kind of, over the last kind of few months, I've kind of got to the point of view where, like in eToro, I just kind of got to the point now where I actually just don't post about if I'm buying these spec plays, because I've kind of realised that people just buy things if I say they're a buy without doing any of the research. And it just frustrates me a little bit that if someone comes to me and go, what's kind of happening with here? I bought this stock and you said it was a good stock to invest in. It's like, come on. So yeah, overall, I've not really kind of talked about so many high risk plays that I start buying anymore now, just because of that reason. But I still buy a few. I just keep it on the down low, or only the kind of patrons kind of know which ones I'm kind of buying from the high risk point of view. But yeah, overall, hope you enjoyed the little video on the 5 stocks I'm up the most and 5 stocks I'm down the most. Really like a lot of these here, and a little bit of where I see them going a little bit more. But same with these guys, a lot of these I still believe in. There's not any that I'm kind of looking at and panicking about. So yeah, I think if we were to do this list again in a year's time, I think it could be a very different list as well. So yeah, we'll see what happens. I think there'll be a few stocks that creep into here, but also I think there'll be a few stocks that disappear from here as well. So yeah, I hope you enjoyed the video anyway. If you could hit the like button, that'd be absolutely amazing. If you're new, subscribe, and I'll see you in the next video.